Good morning, everybody. It's Chris from Serene Education with the 4 majors news update for the 15th of January 2014. Okay, guys, let's look at the 4 majors this morning. Started with euro against US dollar. Got this on a weekly chart. I just want to show you the significance of the resistance level we're having here at the 61.8 monthly fib level. Okay, you can quite clearly see that price has moved between these monthly fibs over a pronounced or prolonged period of time. And here on the hard right edge, you can quite clearly see that the past 6 months, in fact, we've had a lot of resistance at the 61.8 monthly fib level, and prior to that we also had some further resistance here through the earlier parts of 2013. So clearly resistance here, and if price is failing to actually break above this, then you're probably potentially starting to look at why, if there's any further genuine sentiment likely to push the euro higher anytime soon. And this is a clear fact. If price fails to break above a major support and resistance level on the first attempt, then it's likely to be more of a profit taking. So you'd expect a pullback. However, the longer price takes to break something, the more you tend to see less momentum heading or moving again in the same direction. The more times you hit or try and attempt to break a level, and after a period of time you're likely to see price actually starting to fall away, and people will start saying, well, hold on a moment, there's clearly no more equal drive or drive higher. I'm now going to go and look and see if I can put my money to use somewhere else. And the past 2 weeks ago, in fact, we actually had a bearish engulfing candle, and that bearish engulfing of here actually engulfed the prior 3 weeks of movement and consolidative movement. So last week, in fact, we had a bit of a pullback, and that pullback was primarily end of week data from non-farm payroll, very weak non-farm payroll figures out of the US market. We saw this consolidation. However, that doesn't necessarily mean that we're going to see a reattempt of the highs yet. We do straight away right now have a red arrow. However, this weekly candle has still to close. Okay, there's a couple days still to go, and that will need to close. And if it closes lower than the current resistance level, then the sentiment is telling us that there's it's telling us that there's less momentum in this case driving it higher. The candlesticks are still very much positive, which is good because the long-term trend is still very much higher. We're still above the institution. Everything's look fantastic, and we still have broken the price 50, and we have seen price moving up to the 61.8. However, this is the case. If we are to see higher highs or positive trends, we would need to see, and we do need to see, price breaking the prior high. And clearly price has failed for a number of months now to break the current level high, and that's not a good sign, because now price, each time she's attempted to break the high, she's got less and less people or less sentiment or momentum, positive momentum in this case, to drive her higher. Okay, so we're starting to see a slowdown now. You can see the RMO indicator pretty much flat, and the RMO, you can see the actual bars are starting to slow. It's still positive because it's still above the zero level, but you can quite clearly see we are seeing a slowdown. And the indicator box is pretty much telling us we have a lot of indecision out there at the moment, because there's a bit of everything. I mean, the long-term sentiment is still positive on the monthly. Clearly we are still moving higher. We are making swing highs. Everything's looking fantastic. Okay. However, near term we are seeing consolidation. There's a consolidation, and that's primarily what's starting to be depicted now on our daily, intraday, etc. So driving down to our daily time frame, you can see we've had a fall from grace recently. We've had consolidation, bit of upside after non-farm payroll. However, since then, nothing really moving it higher. Okay, so if I can just get rid of this, just move it down. There we go. So the current high is this high that we had on Friday onwards. So Sunday, Monday, Tuesday, and you can see Wednesday now, clearly Tuesday, in fact, a spinning top. Okay, indecision. So the past 3 days, in fact, we've seen a lot of indecision. Not a good sign when you're meant to be looking for decisiveness and prices moving higher. This over here, clearly a nice shooting star formation, an exhaustion candle. People getting on the last moment. However, a lot of I presume a lot of the true traders out there had already started to cash in their chips, and subsequently we saw the fall that later followed suit. But you can see the RMO indicator pretty much back below the zero level, and you can quite clearly see as prices fall from grace, you can see the RMO has started to move in the opposite direction. Okay, so clearly a slowdown here, and making swing lows, and you can see the last arrow on our daily very much red, but the candlesticks are still red, still blue. Okay, so we would need to see the candlesticks turning red, and that would then generally dictate to us that we should be looking for lower lows, i.e. back towards the 50% retracement level here, fib retracement level, excuse me, on at 1349, but also it'll also be back towards our institution moving average, which has been a valid support for price since July of last year, in fact. So a lot of positiveness. However, clearly resistance above price, and if there's very, very strong resistance, price is then going to be will be pushed lower, forced lower, because there's no positive momentum driving her to make new highs. Okay, so if we aren't seeing that, then we're likely to see new lows. Okay, so 4 hour time frame, there again you can see the institution moving average over the past couple of days now acting as a resistance level for price. Clearly you can see price trading below the institution moving average. So if we don't see this or a new high being forward soon, i.e. the Friday high being breached here at 1360 and 8, as well as what we call the institution, then there's more likely for price down then to start looking more negative. You can see on our 4 hour we have a red arrow. The candlestick that's in play right now on this time frame is starting to look negative. And if I can just bring up my EJ candlestick time indicator, there we go. There's 234 minutes and change left on this particular candle, and if I just zoom in, you can see the candle is now starting to show red. However, to be a genuine sell opportunity, we've had a resistance, clear resistance here. We need to see a nice bearish engulfing candle. The RSI is below, but the RMO needs to drop below that, and then what we could do is start to target the prior lows. Okay, this prior swing low here, which would be there in fact, and there's roughly 70 pips in that potential move. Our daily break below that, then you can start looking back towards our 50% retracement level. Sterling monthly, I wanted to bring up the monthly. We did a webinar last night and I failed to really point out, but sterling's trading at a very, very important level, and clearly the reason why, because if you look at the fall from grace over 2007, 2008, and then we saw the consolidation or the bounce in 2008, 2009, you notice a price rallied to a certain point, and that certain point was around about the 16,700 mark, and subsequently prices failed to break above that psychological level now ever since, in fact. Clearly 16,700 is a major resistance level, and price is at that level as we speak. Noticeably over the past couple of years, price didn't even get that high. In fact, it was trading even lower here at the 38.2 monthly fib level, and you can see the reason why I use my fibs, because price actually moves between these points quite uncannily. It's because a lot of the major traders out there are using these fib levels, so why not use the same tools that the big boys are using? And clearly price has been moving between these 2 points. So we are at a crossroads. We are at a major resistance level, because you can see on the monthly the institution moving average running at the top of here has forced price from moving any higher, and you can see how consolidative sterling has been against the US dollar for as many years. In fact, we're looking at 5 years now, going to our 5th year now of consolidation. So the importance for sterling, the great run it's had recently, the fantastic figures, the fantastic production figures, the fantastic GDP quarter-on-quarter figures, fantastic, everything's been looking very, very, very good for sterling, in fact. However, that will mean nothing if we cannot see price edging higher than this major long-term support and resistance level. So very, very important. We are at a crossroads. It's vital that this month or any month preceding closes above that, because if we close above this, psychologically everybody will then start to look to purchase longs, because psychologically it's broken a major resistance level, a psychological resistance level for a 5-year period. So each time we've gone to this level, we've always fallen back, and quite drastically. So very, very important that we get above this as soon as possible. Everything's looking fantastic long term. However, you can quite clearly see we are at this level. So people who had actually bought back here, for example, in mid 2013, looking to trade to these highs, would have taken this as a major target area. And now you're seeing people, or the traders in fact, starting to take some of that profit off the table now, and hence the reason why we're seeing a lot of consolidation and negativity. So drop down to our weekly time frame. Straight away I get a buy signal on my weekly time frame. However, unfortunately, we're buying into the monthly fib level, which is the 38.2, but we also have that psychological institution moving average, the major 4-year high here, 1673, which I've put in a nice bright green horizontal line. So you can see quite clearly on the past month, in fact, we've seen a lot of consolidation at this area. Before we had a lot of resistance and we had the breakout. Now it's consolidating in and around this area. Ideally, we want one or two things. We either want to see a bearish engulfing candle to tell us, great, nobody wants to go any higher anymore, let's start to look for lows, and then you can subsequently look towards your swing lows, and there are a number of them. If you want to take your current low to your current high, for example, you can do that on your weekly time frame, because we had a start to this uptrend back in June of last year to the current high, which is the weekly 2 high here, and then just take that and change it to a different color. There we go. The 23.6 would be a valid opportunity, which happened to be a price support and resistance level. Then back to the 38, which happened to be a price support and resistance level. Back to the 50, which is our institution moving average on this time frame, but also a price support and resistance level. 61.8, thereabouts. We had a consolidation here, but then the 78.6, which marries in quite nicely with our 23.6 level here at 15,300, and vice versa back towards those levels to the downside. So I know clearly what needs to happen. I know that long term we have a major support and resistance level high that we need to get above. However, if we don't see any true sentiment moving at high anytime soon, there's more likely to be consolidation. If there's more likely to be consolidation, there's always going to be an attempt for change, market sentiment change from one of positiveness that we've seen recently to one of negativity. Therefore, we should be looking to capture this pullback momentum. US dollar Swiss franc daily, yeah, very strong support and resistance level recently, and the US dollar bouncing on the 38.2 fib level and moving higher over the past number of weeks or months. And subsequently, what's happened is recently we've seen price pulling back sharply, and what it's done is it's formed a new swing. Okay, this is a high. It's not moved any higher than that. And subsequently what it's done now, it's formed a new swing, which is low in this one, which is low in this one. So you can see that the US dollar Swiss franc since early 2013, in fact, has been making swing lows. And the institution moving average, as you can quite clearly see, is above price. You can see the long-term sentiment very much still negative, because we are making swing lows, and price, the US dollar has fallen aggressively against the Swiss franc. However, you can see the intraday sentiment starting to look positive, and that's primarily because we've actually over a number of months actually found support at the 38.2, and we've now bounced higher. Past couple of days we've seen a bit of strength for the US dollar. We had a pullback that was purely down to the negative outcome of non-farm payroll last week, in fact, and which we saw pullback on the market. However, subsequently over the past couple of days we've seen a consolidation, and price is now making a valid attempt higher. However, notice the candlesticks are still very much negative. Remember, this is just a consolidation in a negative trend. Okay, move, pull back, move, pull back, move, pull back. That's trend. That's clearly the ebbs and flows of what a trend is. In this case, US dollar is negative against US Swiss franc, and we are seeing major trend lows. We are trading below the institution, which is a very, very, very important moving average, and as long as price is trading below that, then we should be looking for shorting opportunities. Near term bounce, and we're seeing it, but you can quite clearly see that the candlesticks are still very much negative, and I don't think there's any opportunity or valid opportunities for US dollar to look strong or positive until we actually trade above the institution and the candlestick turns blue to tell us that. You can see the RMO very much still below the zero level. There are one or two areas when it was trading above, but clearly you'll be trading into the institution here, and you're trading at the underside of the institution here, so you'll be trading against market sentiment, which is a no-no. Okay, so clearly we would need to get above the institution, and the candlestick would need positive. Then we could target the 23.6, but ideally that's what we want to be looking to capitalize on. So if US dollar can rally above the 23.6, above 93,100, get above here, and that would be the plus we're looking for. Okay, US dollar Japanese yen on the weekly. Here again, I wanted to just bring this up to, or let's go back to the monthly so I can show you the fall from grace for the US dollar against the Japanese yen. since 2006. We had a beautiful bottom formed here over 2011. In fact, most of 2011 was forming this major support and resistance level here, and subsequently you can see the US dollar has gained a lot of strength through the latter part of 2012, 2013. In fact, we spent most of 2013 consolidating here at the underside of the 50% February retracement level, but subsequently we've seen to the end of 2013, in fact, we saw a lot of positive coming back into the market, a lot of indecision. We want to see a decision candle. There was a decision, the break above the 50%, and you saw price rallying very aggressively up towards the 61.8. However, we are at the monthly 61.8 February level, and you can see price has gone back into a consolidation as the traders have taken profit now after the breach that we saw at the latter part of 2013. RMO has gone positive. Okay, you can see for a prolonged period of time the RMO was below the zero level. Now it is above. Osmo indicator has clearly been above, since we started to forge out this very strong support level. Moving on to the weekly, prices at that level, you can quite clearly see we had a bull candle followed by a hanging man followed by a bear candle. So it's almost an evening star formation, and at the 61.8, which is a valid support, major support and resistance level, and price is consolidated. Notice the candlesticks haven't changed. Okay, we are still very much, you can see through this very, very volatile period where we had this major wedge formation, the candlesticks did not change. So it told us that the sentiment was still very much favoring the upside. We just had to be bloody patient, excuse my French, and because that momentum still wanted to move higher. So we just had to wait. We had to wait for the candle to break above the 50% retracement level. We had to wait for the blue arrow to start. So we had a blue arrow break above the 50%. RMO was already above. We needed to wait for the Osmo to get above the zero level again, and there would have been a valid entry point, and we had a valid target. Okay, so after that entry to that level, you would have made 360 odd pips quite comfortably, just following the rules of the template. Okay, so very, very important. The beauty of this particular template is it's very mechanical in its approach. Therefore, you aren't guessing. Okay, it takes a lot of guesswork out of it. The beauty of mechanical training is that emotional tie that gets a lot of people into trouble is not there on the table, and that's the most important thing about it. So very, very important. So going down to our daily now, and you can see that price has consolidated quite aggressively here over the past couple of weeks. So we had a start of the move here. So if you wanted to take that as your daily fib level, okay, you could always take that level to the current high. You'll notice that price over the past couple of days has tested the 23.6 fib retracement level, and you can see it's a valid area where price has consolidated in the past. So you'll notice that price actually on one occasion on the daily closed lower. So ideally what we wanted to see here was the candlestick to turn red, but the 23.6 for every other day preceding this bearish engulfing candle to now act as a resistance level. That failed to happen because what happened was we had a bullish engulfing candle move higher. This represents now a tweezer bottom, which is a very strong change in market sentiment, a change in directional candle, and now subsequently prices heading back up again. Notice on the daily of the candlesticks, even though we had a major pullback recently, the candlesticks are still very much positive, which tells us the sentiment still favors upside. Okay, yes, we have a red arrow, but the candlestick needs to be, and notice the RMO is still very much above the zero level. Osmo clearly below, but that's a more aggressive movement indicator, and that would have definitely played out as possible. That's just working out or playing out as required. So this bullish engulfing candle we saw yesterday forming a tweezer bottom now at a major support and resistance level, i.e. here the 23.6 daily fib, and that now means that we should be looking for the bias intraday should start favor the upside. The intermediate, you can still see we're still seeing swing lows, so if you want to be passive, then you would have to see a break above that. The candle the arrow would have to produce a blue, then we could start looking into it. On the 4-hour time frame, you'll notice we have a blue arrow, candlesticks are blue, RMO is above, the Osmo indicator is above. However, we need to see a break of a new high. That would give us further upside sentiment. You can see the institution below price. So that tweezer bottom we saw on the daily being forged is a very strong reversal candle, and let's see if it's going to be moving back up towards that the highs that's just come from here at the 105.48. Hey guys, a bit longer today, but I wanted to just reconfirm what it is that the FX Ultimate 8 template brings to the table for you guys in terms of how it works, how it should be working for you, how it should be taking the emotional tie to trading, and how you should be proceeding on gauging what to do with the outcome or potential setups for that. And then obviously you put in your money management rules. Very, very important. You might have the best strategy template in the world, but if you don't have a great money management to back that up, then it's worth absolutely nothing. Okay, so very, very important to still stick with very, very strong money management rules. And if you have both of them and you work to a definite plan, a strategy that's clear what it is, then you're more likely to be more profitable going forward. Okay, don't overcomplicate your trading, guys. That's the last thing you want to do. It is complicated already. Why the hell would you want to make it even more complicated? Hence the reason why we've come up with the FX Ultimate template, to make it easier to grasp where that sentiment lies. Remember, we as traders, we're trading sentiment. We want to trade sentiment. We want to trade volume. We want to trade direction. And the FX Ultimate 8 goes that way in trying to decipher where that market sentiment lies and how bullish is it, and then we can capitalize on the outcome. I'm going to leave you with that. Hope you have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.